Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 14th of May. All right, now just having a look at the risk on, risk off page, primarily because the US equity markets, okay, down 2%. Now, this is after Federal Reserve Chairman Powell came out and said they're basically just going to do everything they can, like just keep sinking cash into this, which is a little bit of a surprise. I would have thought that would mean the equity markets would rally, but they haven't. And we've seen, there's been a bit of a weird movement across the currencies. Some aren't moving. The yen crosses are all moving down at this point. And just keep a close eye on the Asian equity market, see if they actually sort of tinker in with as much as those US equities. It is a lead-in for us, that's for sure. Now, the correlation sort of matrix, just looking at the correlations here, but US equities on the x-axis up the top, and the currencies on the Y, there's not a hell of a lot of really close correlation. So the connection with the currencies and the equity markets at this point has, in my view, sort of dropped off, right? So make sure you're not sitting with that. Just having a look at some of the sort of factual stuff that's going around. The year on year, the major pairs, okay, look, just having a look at this point, or this is actually, sorry, a monthly view. Sterling is the one pair that's really moving, right? And this is where we're sort of catching some of the profits, trading sterling to the downside. There's, there's the whole coronavirus situation is not dissipating in the UK yet. I expect it to stay for much longer, and that's going to be a negative outcome for the economy and obviously sterling as well. The other pairs, well, Kiwi's sort of getting there, and it should accelerate after the RBNZ negative comments yesterday. And euro, the rest of the currencies not doing too much. If anything, dollar CAD, obviously, with the weakness in oil up, well, yeah, the pair is up 1.5%. So that's where we can see some sort of little bit of direction. If you're looking across market, right, across on a yearly basis, gold, well, it's up 13%. Okay, there's a lot of room for that to come back down. But I tell you what, I can't see this crisis ending anytime soon. And US Treasuries, well, down 66%. That's a little bit of where all the pressure is in those US markets. All right, now just coming back to the dollar itself, having a look here, what's happening, the dollar index. Okay, Powell's started speaking, a little bit of pressure on the downside, and then the markets kick into top gear. That's when the equities start crashing out. And there's not much more you can do about that. All we have to do is wait and see what they say and see how the equity markets rally. And that's where we're going to get a real lead in now. If you have a look at the charts, I'll just click here across. Okay, we are getting a situation here where the charts are, there's some clear moves. Aussie's just drifting sideways through the trend line. Now, we've got Australian employment numbers coming out in about 15 minutes. So that could, if these numbers are a bit of a blowout, and I expect them to blow out probably more than what's forecast at this point, which the forecast is for minus 575,000. I tell you what, it's got to be closer to 1 million or more. And that should put downside pressure on the Aussie, as that would expect the RBA to come in and start sort of talking very negative like the RBNZ. Now, the RBNZ sort of talked down, no change in rates yesterday, but we're very negative on the outlook for the economy, pretty much like every central bank. But it did start to run with it. We saw a nice little retracement there before it's drifted back down below 60, the figure. Dollar yen, well, it's trading sideways in a big range, I should say, but it is sort of stalling here around 107, the figure. Euro just doesn't want to really play. I mean, it drifted off about 60 points yesterday with that slight dollar rally, but you know what? It's still within recent ranges and is a little bit tricky to play. I think the market's short still. I've still got a short bias, but haven't got any positions. Sterling, as expected yesterday, breaking down through 122.50. By the time it broke down, it was 122 sort of 60, 62. And it's now sort of found fair value around 122.30, 40. So, but to me, sterling, out of all these pairs, I can see probably just at this point, Kiwi and sterling has been the two pairs with clear direction. Okay, I expect the Aussie to catch up today with really weak employment numbers. Obviously, if those employment numbers are strong, well, it's not going to play any part in that downside move. And dollar CAD, okay, oil, well, it's rallying slowly, but it's still sort of drifting sideways, and there's a bit of pressure on the top side here in dollar CAD as we come into today's trading. Now, if I bring you over to the FX Market Insight, right, market conditions are pretty good. Obviously, the geopolitics around the coronavirus are still the main drivers. The active pairs, as I was just saying, sterling and Kiwi, looking to sell a rally on both of those pairs. They've already moved. And what we're trying to do is we got into sterling yesterday, and you can see the trade set up on the analyst pick, okay, how that one played out. The trailing stops sort of made sure we made some cash, but we didn't get that follow through that we were looking for. And today's analyst pick is pretty much sterling, going back for more, looking for a rally to the top side back towards 122.70. Now, the rest of the pairs, I'm sort of still watching them. Okay, we've got levels here. They've got support and resistance levels on most pairs, but we just don't have that clear overall direction, right? And that's what we're sort of waiting for at this point. Now, coming down, we've got a big day here, though. There's, well, across the board, employment numbers coming out, as I said, very shortly in Australia. The Bank of England Governor Bailey speaking, but then we've got the initial jobless numbers out of the States. But what I was going to focus on is dollar CAD. We've got the manufacturing sales numbers, which probably won't come into play. It'd be interesting to see what they've got. And then we've got the Bank of CAD financial system review, followed by the Bank of CAD Governor Poloz speaking afterwards. So dollar CAD, pressure on the top side. You know, all this data comes out weak. We should see dollar CAD pop. I'm not sure exactly how it's going to play out, but that's where the momentum will potentially come from. All right, so make sure you're keeping an eye on dollar CAD, CAD crosses, Aussie dollar, and obviously sterling. I can't imagine the new Bank of England governor talking up the prospects of the UK economy, especially with all the levels of, you know, extra data about how many infections there are in the UK, etc. And that's pretty much it for me, guys. As I said, the main news that the market is focusing on was Powell's speech. He's like, there's no time to worry about US debt. Let's just sink everything into this. They've obviously got no rules about how much debt they can spend. And that's obviously going to create problems down the track. But we're going to wait and see how this plays out. There's a fair bit of fear-mongering going around too about the early rollback of these lockdowns. Right, so we're going to see how that plays out over the course of the next week or so, and wait for Trump. I'm sure he's going to kick the Chinese in the belly again with more tariffs, and those sorts of rumors are still going around. All right, guys, have a good one. All the very best. Cheerio.